The years where inheritance tax was only applicable to the wealthiest in the UK are long behind us. Over the last 20 years, we have seen a boom in UK property prices, which means the majority of us will be impacted by inheritance tax. It can be pretty disconcerting to realise that almost half of your hard-earned cash might be heading to the taxman rather than your beneficiaries. So I'm going to cover off the basics of what you need to know about how inheritance tax might affect you. There is normally no inheritance tax to pay on assets within an individual's estate if the estate is worth less than £325,000. You might have heard this referred to as the nil rate band. Anything over the £325,000 nil rate band will be subject to the standard UK inheritance tax rate of 40%. There are a few things that can impact this though. If an individual leaves their estate to their spouse, civil partner, or a charity, there is no inheritance tax applied whatsoever. So you can effectively leave an unlimited amount of money to your husband or wife without inheritance tax being levied. It's also important to be aware that any unused nil rate band on the first death within a married couple or civil partnership can be transferred to the surviving spouse, although you can only inherit double the allowance, so it won't just continue to accumulate if you're unfortunate enough to be widowed for a second time. If charity is important to you and you leave at least 10% of your estate to registered charities, the 40% inheritance tax charge will be reduced to 36% for the remainder of your estate. It's a pretty neat way to reduce your IHT burden whilst also having a positive impact on the world. There's also something called the residence nil rate band, which is a fantastic benefit for homeowners that was introduced back in 2017. The residence nil rate band is an additional £175,000 that can be added to your standard nil rate band when you're passing on a property to direct descendants such as children. It can only be applied to one property and the property had to have been a residence of the deceased, but it's a pretty superb benefit as if you're married or in a civil partnership and you both own a property, you can effectively pass on £1 million of assets entirely free of inheritance tax. This can get a little complicated though, and the rules start to alter for estates over £2 million, so it's best to seek advice if this affects you. Gifting can be a great way to reduce your inheritance tax liability. Everyone has an annual gifting allowance that means they can give away £3,000 a year without any IHT implications. There is also a phenomenal wrinkle in the tax system that very few people make use of called gifts out of excess income. As long as you can evidence that you are making the gift regularly and out of earned income that you otherwise didn't need, you can gift an unlimited amount completely tax-free. And finally, a gift of absolutely any size will fall out of your estate after 7 years, which is incredibly generous compared to the rest of the world. Although do bear in mind that there are slightly different rules if the gift is made to a trust as opposed to an individual. It's why if control isn't important to you, gifting can be a great option. Before even considering gifting though, or any other methods to reduce your inheritance tax liability, do ensure you've carried out a cash flow plan with an advisor to determine that you have enough funds to meet your own needs first. So given that inheritance tax is impacting more and more people, make sure you keep an eye on all the rules and how they could apply to your estate. Because remember, your money really does matter.